Data released out of Poland today highlights a fall in the jobless rate as retail sales soar. This comes as the government last week unveiled plans to widen the budget deficit and suspend rules limiting fiscal stimulus. Lukasz Tarnawa of BOS Bank is on the phone with me now from Warsaw. Lukasz, Poland's jobless rate fell to 13.20% last month, in line with expectations. Talk us through some of the drivers for this figure.
Yeah, first of all, we should bear in mind that jobless rate in Poland is not seasonally adjusted, so the drop in jobless rate came mostly through the seasonal effects. This is increased employment in construction, for example, or agriculture. But we also see some signs of stabilizing of the labor market. We saw today the increase on the monthly basis in employment in services and in manufacturing. So it gives us hope, or close to certainty, that the situation on labor market is gradually stabilizing. At least it is not worsening, and we think that in coming months we will see gradual stabilization and improvement in the labor market conditions, and at the end of the year we will see the increase in employment in Polish economy.
Retail sales in Poland rose more than expected in the last quarter, a huge 1.8% year-on-year for June, when compared with May's dismal 0.5%. What has sparked this leap, and more importantly, is it sustainable?
First of all, we should bear in mind that this is in nominal terms. In real terms, it was even higher, above 2%. So we've got a peculiar situation in Poland at the moment that we've got drop in retail prices. So that's why the real data concerning real sales is higher than nominal. So we've got the third month in row improving retail sales. Although there were some seasonal effects helping higher retail sales in June, we also could see some positive effects of real income increasing and stabilization of the labor market, causing more consumption spending of the households. So I think we've got gradual improvement thanks to the real increase in wages, partly thanks to the drop in inflation, and also stabilization of the labor market conditions. In my opinion, it points at gradual increase in consumption demand in second quarter of this year. So our estimate is that it will increase by 0.5 percentage point in second quarter of this year, which is in comparison to the zero rate in first quarter of this year, and gradually, thanks to those factors I mentioned, we will see gradual improvement in the second half of this year.
With all of this in mind then, how do you see the Polish zloty trading in the coming months?
Well, zloty appreciated within last weeks by 10 cents, so it was quite strong appreciation. This is obviously on the back of the improvement in global sentiment, thanks to Ben Bernanke's remarks and lesser fear about tapering of quantitative easing program. So zloty appreciated, and I think there is a very limited scope for further appreciation. As I said, factors coming from the public finance and the economy and the external situation of the economy limit the scope for depreciation. On the other hand, the limited perspective of excess liquidity on the global markets also limit the inflow and demand for higher risk assets. So I think for the short term, we will see rather stable trend in zloty and stabilization at the current levels. We could see some appreciation towards the end of the year, thanks to further improvement in the economy, and also we could expect some inflow of the EU funds, which will be transferred on the market by the government, which could want to strengthen the zloty and lower the debt level at the end of the year.
That's all for now, but Lukasz, many thanks for your comments. I'll be back tomorrow with a commodities-themed Targets in Focus interview and a closer look at Australian inflation data. Goodbye for now.